Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
Hey there! Today is a very important day for our podcast, as today I shall be probing Nirav on the love of his life, Mr. Warren Buffett. I have waited for years for this podcast to happen. Let's enjoy. So great. Good morning.
Good morning, Chaitanya.
Once again. So today is your favorite topic. You are really passionate about this person who is the icon of the investing industry.
Yes.
And we can't say too much about him. Is Warren Buffett.
Yeah.
So very interesting topic. You all in every meeting of ours, we have to discuss this topic. So I was just wondering, Nirav, that you are so enamored by Warren Buffett.
Yeah.
Is it possible that anybody in the finance line has not heard about Warren Buffett? I don't think so.
Ideally, that should not happen.
Yeah.
Okay. But then when I keep giving seminars on Warren Buffett, the first question I ask is, how many of you heard? This is the question I asked to the hall. And I still come across people. Now, there are many, Insta Reels and YouTube is filled with Warren Buffett, and people who don't even know about Warren Buffett claim to know about him.
Okay.
So now the things are different, but 10 years, 12 years back when I started, giving lectures on investment secrets of Warren Buffett, which you know is my favorite topic, and whenever I would take a poll in the hall, not more than 25-30% people would have heard about it. He's become much more famous now. He's gone viral now.
Oh, yeah.
But it is still possible. And just hearing about him, Chaitanya, is not enough. Just knowing about him. And people quote his quotes without understanding in depth what the quotes mean. Okay? So just knowing about him, if you are a finance person and you've just heard about him and never read about him, then I think that is the biggest disservice you are doing. It's like if you are a Hindu and you've not read Bhagavad Gita. Okay? You might have, there are one or two quotes of Bhagavad Gita that everybody can speak.
Speak verbatim.
That doesn't mean you don't know Bhagavad Gita. That doesn't mean you know Bhagavad Gita, right? So just hearing about him is not enough, just knowing him is not enough. And I still believe people are not aware of what that man has actually done. And I think we should learn from that man.
Yeah.
Yeah.
It seems like a very big topic. His life, his decisions, his thinking seems to be something which needs to be imbibed. It's not something you will come to know quickly, but it needs to be imbibed over time.
Yes.
Get into your DNA kind of thing.
Yes. उसको आत्मसात करने की ज़रूरत है. It should be in you.
Yeah.
Okay. And there have been enough myths about him, right? Also. So in this podcast, in the following podcast, we'll try and clear myths and misconceptions about Warren Buffett, and we will try and give more clarity on what the man is all about. Okay?
Very nice. Very interesting.
Right. And let us start with a story then. Okay.
Sure. Which one?
And okay. So once Warren Buffett was addressing a group of students in a university, right? And this is the question he asked. Or let me turn it and let me ask you a question, Chaitanya. Let's say I give you an offer. You've been a good friend. Okay. We've had a good relationship over the years, and I'm very happy with you. And let's say I have enough money to buy any car in the world for you, and I decide to gift you a car. Okay. So the car will be delivered. It would be gift wrapped, with a ribbon, and delivered to your house. Any car of your choice, any color of your choice, it will be delivered within a week at your doorstep. Right? Now you're going to ask me, what's the catch, Nirav? Right? I am not somebody who believes in gifting. Right? You'll ask me, what is the catch? So the catch here is, Chaitanya, that this would be the only car you can ever have.
Okay.
Now tell me, how are you going to take care of that car? If I gift you the car of your dreams to you, gift wrap to you, okay, it didn't cost you anything, okay, but you will never be able to buy another car. How are you going to take care of that car?
Yeah, very well. I'm going to take care of it very well.
Right? extraordinarily well. Because if that car
Goes away or
something happens or it gets damaged, you will not get another car, right? Now, why this example? This example was given by Warren Buffett to a group of students, and he said, see, just like this car, our body and our mind, we only have one, okay? And you cannot have another, okay? Everything else can be bought. So you better take due care of your body and mind. So I wanted to start this particular anecdote of Warren Buffett, Chaitanya, because I have learned equally about stock market from Warren Buffett and equally about life. He is not only an equity guru to me, he is also a life guru. That man lives and breathes equity, and that man also lives the life the way an ideal guy should live. So you asked me why were you enamored from with Warren Buffett. So he's also a wonderful human being, one of the best you can come across. And normally what happens is that in the world of money, once somebody becomes successful, especially in the Western world, the money goes to their head, and they try to make all those blunders and all that. And then when you see their lifestyle, so my guru Warren Buffett has had a very humble beginning, and even though he's the 6th, 7th richest man in the world today, his lifestyle has not changed much. Okay, that's why I wanted to give you that example.
Oh, wonderful, wonderful. So I think what he has done by giving this example is he has placed the most important things in life in the order of priority. Like your health and your mental health are first. Then we can talk about wealth in that background.
Yes.
Because that's the foundation.
So see how we discussed in one of the prior podcasts. What is unique about Warren Buffett? Is this unique that he gave 20% compounding return? Is that unique to Warren Buffett? No.
For a long time.
So the uniqueness about Warren Buffett is not that he has given 20% return. There have been many wealth managers in the Western world and in India who have given 30, 35, 40, 45% compounding return. But then they got tired after 10, 15 years. So what's unique about Warren Buffett is that he gave 19 point something or 20% odd compounding return for a period of 65 years. Now if you want to manage money for 65 years, you have to live for 85, 90, 95 years. That what his age is today, 93. Understood? So if you don't have that kind of leeway, if you don't have that kind of number of years in what we discuss in the episode on compound interest, then how are you going to become Warren Buffett? Hence, health is important, both mental and physical. And that is a rarity. You cannot buy health with all the money that you have in the world. Okay, now let's move to one of the most famous quotes of Warren Buffett, Chaitanya. So the most famous quote is, there are 2 rules of investing.
Correct.
We've discussed it before. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So yesterday I came across an example of an NFT. Okay.
So what is an NFT?
So NFT is non-fungible tokens.
Non-fungible
tokens. So after the crypto craze, non-fungible tokens. Fungible.
I don't understand this.
So I'll tell you. After the crypto craze, NFTs came into being. Okay. So the NFTs are, whatever little I know about the subject, these are digital tokens.
Okay.
They take a digital photograph of a particular event or a particular painting and then they sell it out. Okay. They became a rage during the COVID era. Now nobody talks about it. So yesterday I just came an example of Jack Dorsey. Jack Dorsey is one of the founders of Twitter. So when he founded Twitter, he tweeted, he himself came out with the first tweet on Twitter. Like on YouTube, there was a guy who gave the first video on YouTube. So similarly, Jack Dorsey, being the founder, promoter of Twitter, came out with the first tweet. So somebody made an NFT, a digital token of that first tweet and sold it, if I remember right, for $2.4 million.
Oh.
Okay?
Okay.
You know what is the price? And somebody in Hollywood or some big sportsman bought it. Okay? You know what is the price of that NFT sold for $2.4 million today? It's $4. $4.
Crazy.
See, so the world of money is super crazy. Don't say crazy. It is super duper crazy. And this is how wealth. Imagine the guy who would have bought it for $2.4 million. It is only a digital photograph. Beyond a point, that is what NFT is all about. Okay. So we come across example after example. When I give you a quote of Warren Buffett, yeah, I've heard that quote. Rule number 1, don't lose money. But imagine this person had not come across this rule, or he didn't understand it. This man lost $2.4 million. The value of that NFT has gone down by 99.99%.
Crazy.
So that is
Super
how
crazy.
I'll explain. Rule number 1, don't lose money. Rule number 2, do not forget rule number 1. Okay. Now, what more you would like to know about Warren Buffett?
About Warren Buffett, I've heard that he has a very good friend called Charlie Munger.
Right.
And just now, before our podcast began, you mentioned something about him having verticals of insurance and non-insurance. So,
Yeah.
Why don't you expand on that?
Okay. So Charlie Munger is Warren Buffett's right-hand man. In fact, many people who see them, they say they look almost like each other. Okay. So every investing decision that Warren Buffett makes, he always cross-checks at Charlie Munger. And they say they only have a 5 or 10 minute conversation on any investing that they do, including when they invested in Apple. And if Charlie says that we should not go for it, Warren will never go for it. So an investment, so they have a 2-member investment. In fact, Warren Buffett says we don't have an investment committee, but there are these 2-member people. If they decide they want to invest, they'll take the call. If they decide they want to reject an opportunity, they will do it in 5 minutes. So I don't know what is the right word for it. He is his better, what is the word, English word for that?
For what?
He's his sounding board. They are each other's sounding board.
Vetting it out or sounding board.
Right? So, and we'll talk in depth about Charlie Munger sometime in the future. Right? Okay, we'll have a separate episode of Charlie Munger. And as I tell you, after being a fan of Warren Buffett for couple of maybe 1.5, 2 decades now I've also become a huge fan of Charlie Munger.
Okay.
And as Warren Buffett says, he's much more intelligent than I am.
My God.
Right?
Imagine his humility.
And Charlie says Warren Buffett is much more smarter than I
Yeah.
am. But I believe Charlie is way smarter than Warren Buffett. And it's only because of the partnership of Charlie Munger and Warren Buffett that Berkshire has become what it is today. Although Warren is much more known out there in the investing world. Okay. Now, there's a very famous quote. There was a movie Big Short. There was a book, The Big Short, and there was a movie Big Short. It starts with a quote. I love that quote. The introduction of the movie starts. And the movie Big Short is about the 2008 financial crisis in the Western world in the US, the subprime crisis. Okay? I mean, huge amount of wealth was destroyed. I don't think in the history of the world, any time such an amount of wealth has been ever destroyed. That happened in the 2008 subprime crisis in US. So there's a quote. I love that quote. Okay, it is similar to Warren Buffett's 2 rule of investing. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. It ain't what you don't know that gets you into trouble.
It ain't what you don't know that gets you into trouble. Okay.
It's what you know for sure that ain't so.
I think we discussed this in the previous.
We discussed this. I'll again repeat it.
In the biases.
Yeah, let me repeat it verbatim. It ain't what you don't know that gets you into trouble. It's what you know for sure that ain't so. So sometimes somebody, a teenager or a young kid comes to me and says, मुझे पक्का पता है ये स्टॉक ऊपर जाएगा. So it applies here. आपको क्या पता नहीं है उससे आप financially destroy नहीं होंगे. But आप छाती ठोक के बोलते हो this is going to happen. And you have not done your homework well. You have not done your research well. And you are too overconfident. That is what destroys wealth. So it ain't what you don't know that gets you into trouble. It's what you know for sure that ain't so. Okay? And this is also one of the Warren Buffett's favorite quotes. He has not quoted it, he's quoted somebody else. Again, Buffett says, now tell me, between EQ and IQ, which is more important in the stock market?
More important. Both are important, definitely.
Which is more important?
But more important, I think it's a contrarian thought. In the stock market, I think IQ is more important. Because in EQ might be good in business fields. But if you are too courageous and you are too optimistic, that's also very dangerous.
So here I disagree with you.
Acha.
As Warren Buffett, my guru, says, EQ is much more important than
IQ. So the whole
He
same
says,
holds true.
Yeah,
Okay.
he says you don't need to be a rocket scientist in the stock market.
Okay.
Investing is not a game where the guy with 160 IQ beats the guy with 130 IQ.
Oh, that way. He has put it the other way.
He has put it the other way. And emotions, if you can control emotions. In fact, tell me which two emotions affect you if you are a stock market investor. Which are the two emotions?
Fear and greed.
Fear and greed, right? Yeah. Nothing else, okay? So when do you fear?
When the stock market is going down.
Yes. And when do you become greedy?
When it's going up.
So in a bear market, we are fearful.
Yeah.
And in a bull market, we are greedy.
Optimistic.
So here is a very another famous quote of Warren Buffett.
Yes.
Be greedy when others are fearful and be fearful when others are greedy. Now this, according to me, is a definition of being a contrarian. See, you do not, if you want to make more money than the crowd, you have to think differently from the crowd. I repeat, if you want to make more money than the crowd, you cannot think like a crowd. You have to think differently from the crowd. So if you follow this principle, and which according to me is a definition of a contrarian investor, be greedy when others are fearful and be fearful when others are greedy. Now tell me, during COVID, what happened? Were people fearful or people greedy? In the first part, when the market tanked,
they were full of panic.
Yeah, so Indian stock market first, I think 14 Jan 2020 to 23rd March 2020, Indian stock market fell by 28%. See, since the time you become my client and since the time I am in practice, we have never seen a fall more than 20%. So last, again in the US subprime crisis, in 2008, the market tanked much more than 25%. And this is the biggest fall after that particular period where market tanked by 28%. Individual stocks fell as high as 40 to 60 to 70 to 80%.
Yes.
Okay, and some of them have still not recovered. So, had you been greedy when the market had tanked and when there was fear all around, and the fear was not only in the stock market this time, the fear was also in our mind, it had also taken a place in our house because we were all afraid of COVID and what can happen, right?
Yes.
But if had you somehow gotten the courage to buy at that time, you would have been a rich man today, right? That fear affected me also, it affected everybody.
Correct.
What happened after that? In the next 18 months, the market went up, boomed, and it didn't stop at 42, it went all the way to 62,000 Sensex, right? Okay, so what was happening now? Which emotion was ruling the market? It was greed, okay? Then till October 21, market went up. After that, for the next 2 years, the market went down by 15% once again. So this time, when the market was greedy, you should have been fearful.
And booked your profits or shift to debt or whatever.
Yes. So be greedy when others are fearful and be fearful when others are greedy. In fact, these two lines, if you follow them to the T, okay, and if you can implement them.
So doesn't one fund, which is a balanced fund, which has a ratio between debt and equity, doesn't it do on an automatic basis?
So that asset allocator fund that I keep talking about, that asset allocator fund, okay, actually made a lot of money, much more than compared to a typical equity fund. So some mutual funds are now designed in a way that they can take advantage of fear and greed because they have realized that a normal person is not able to
manage them.
And now tell me, after I give you the COVID example, which was an extreme example, now tell me, is EQ more important or IQ more important?
Yeah, I can understand.
Right? Okay.
So EQ, what I was mistaking was that EQ means to have too many emotions. Actually, it is being able to manage emotions. That is EQ.
Yes.
Like when the situation is fearful or full of panic, how are you able to manage your emotions?
Yes.
When it is full of greed and like typically the Panwala also is talking about.
So there's one more quote. So the one more quote of Warren Buffett. The most important quality of an investor is temperament. Okay. Not intellect. Again, Warren Buffett is harping on the fact that it's not your IQ which is going to impress me. The most important quality of an investor is temperament and not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd.
So you need to distance yourself, not be in love with the thing.
Yes.
So
you need to distance yourself from the crowd.
If you become very excited about your profits, then you're getting attached and your emotions are going to get out of control.
So he says you need a temperament that neither derives great pleasure from being with the crowd or against the crowd. हर बार भी contra play नहीं करना है. और हर most of the time crowd के साथ नहीं रहना.
Yeah, so that's not the fundamental basis that decides, that makes your decisions, whether you are with the crowd or against the crowd.
Yeah.
That's not the fundamental.
Yes.
It's again coming back to value investing, I think,
Okay.
which Warren Buffett talks about.
Yeah.
And generally being asset allocation or having a better basis for decision making,
Yeah.
rather than following the crowd or becoming contrarian.
Yeah. Now let me take you to the childhood of Warren Buffett. Okay.
Yeah.
So he was born in neither a very poor family nor in a very rich family. He was not born in an aristocratic family. In fact, Warren Buffett is one of the best sense of humors that one can talk about. So what did he say about his birth? He said there was this Great Depression which was happening in US. He was born, I think, on 31st August 1930. So there was Great Depression in US. His father was a stockbroker and he went out of job.
Okay.
He was sitting at home and there was no television.
Acha.
Did you get the point? Right?
Okay,
So
okay. Right.
So that is how Warren Buffett was born, and this is a statement by Warren Buffett. See?
Okay, funny. Yeah.
Okay, so the man is very funny. He cracks, they say, if you can crack joke on yourself, then you are the best man out there. So Warren Buffett has one of the best sense of humor, and so is Charlie. Charlie Munger is one of the best sarcasms out there. Okay.
Acha.
And he comes out with these one-liners. Warren Buffett goes in depth and explains his example. So he was born on 31st August 1930, right? The father had its own issues when he was born, okay? But he was a wonderful parent to him. Mother was a mathematician and, had some psychological issues and all. So he was more closer to his father than the mother. And he was born in, where I go every year, Omaha. Omaha is a small town just like Nagpur, okay? A very small town. In a state known as Nebraska. So neither Omaha nor Nebraska is very well known. And today Omaha is known only for two people. One, I think they have a football or a basketball team. And more than that, it is known for Warren Buffett.
Yes.
And the Berkshire meeting that happens every year is known as Woodstock of capitalists.
Oh.
Okay, so all the people in the world who are something in the world of finance or anything in the world of finance,
They have
all
to visit
flock
there. Yeah.
in the first week of May every year to visit Berkshire Hathaway. So you get all the who's who of the world there. So as I keep telling my family that in that hall, which is some 50,000 people, I would be the poorest guy.
Right.
Okay, and it's a wonderful experience being there. So we'll talk probably in the next episode my experience in Berkshire Hathaway meeting. So Warren Buffett was born on 31st August 1930 to a very ordinary family. Okay, his grandfather ran a retail store, okay, equivalent of a Kirana store in India. And so Warren Buffett came across a book when he was very small, 7-8 years old, okay? He came across a book, 1,000 Ways to Make Money.
Okay.
Okay. Now, one of the ideas in that book, as Warren Buffett says, is that if you, you go to places where children are there, so parks or saloons, and put your vending machines there. So there is a chewing gum vending machine which is very common in US, okay, or slot machines.
Correct.
For small video games and all in their very initial avatar, and that can help you make money. So Warren Buffett went to a guy who had these second-hand slot machines, okay, which were due for repair. He didn't buy the original ones, he didn't buy the new ones. He gathered some money from his grandfather and father, paid that guy, okay, and bought a few slot machines and put those slot machines near a garden or near a saloon where he saw children flocking, and that's how he did across Omaha, and he started making money. Okay, that's how he first started making money.
He knew how to leverage technology at that age.
And he was 9 at that time. Then Warren Buffett also, his grandfather used to sell Coca-Cola. So Coca-Cola as a brand has been in existence probably more than 150 years now. Okay, so when Warren Buffett was growing up, Coca-Cola was already very famous. So what he would do, he would bargain with his grandfather to give him a Coca-Cola crate. with 1 dozen Coca-Cola bottles at a bargain price, at a discounted price. His grandfather would say, okay, as long as you're giving me the cost back, I'm okay.
Correct.
So he'll buy it for a particular amount, and then he'll go to these stadiums where the sports matches were going on, okay, and sell it individual bottle to people at a marked up price.
Correct.
And hence he made some money, a few cents on the crate. This is what Warren Buffett did. Then another thing that he did, all while he was 9 to 11, okay? This guy is 9 to 11 years old. He already had in his mind that he wants to make money. In fact, when he was 11, he told his sisters who were elder to him that I'll be a millionaire before 30. And he actually became a millionaire before 30. Okay, when I say this line that he at 11 told his sisters, I'll become a millionaire, dollar millionaire before 30. What strikes you?
He had a foolproof plan.
No, I mean nobody has a foolproof plan. You can't have a foolproof plan when you are 11.
So I don't know how
So
he
you
was
heard
so
the word.
confident.
You heard the word manifestation.
Yeah, the secret and all
Yes.
this.
Right? So he manifested it. Right? He said, I never thought that I'll be poor. I always knew I'll be rich. He always said that I'll be very rich when I grow up. How? I don't know. So isn't this a very good example of manifestation? Right?
Yeah.
There are many books written on this subject. So it just struck me, so I shared it with you.
Right, amazing.
Like, I mean, I'm not a comparison to Mr. Buffett, but when I was in school, I would only talk in crores.
Okay.
Okay? That's what my parents tell me, that you would always talk in crores. And now I'm in a wealth management business, which I never, until I took this business 15 years back, I've never thought I'll deal with money.
Correct.
Okay.
Yeah, true.
So, okay. Now, then one of the other things that Warren Buffett did when he was a child, 9, 10, 11 year old, is he distributed Washington Post newspapers.
Okay.
Okay. Now, there's one funny story that he was a newspaper boy. Okay. And once a lady told him, so there were these flat systems where he would give newspaper, and one lady said that I want to, discontinue the subscription with you. I don't want to continue with this XYZ newspaper. So he knocked on the door of that lady and asked, ma'am, why are you not taking newspaper from me? He said, see, I like Washington Post and you don't distribute Washington Post. So the 10-year-old Warren Buffett said, okay, ma'am, from tomorrow you'll also get Washington Post. And this happened with some other customers also, one after the other. Everybody wanted the Washington Post. Okay? Now, why I'm talking about this, one, he adopted to the situation. Two, one, when he's probably 28 or a 32-year-old, he'll end up owning a big share in Washington Post.
Okay.
One another company I named, Coca-Cola. Today, Warren Buffett is one of the biggest shareholders of Coca-Cola.
Okay.
By the way, do you know, Chaitanya, that whatever price Warren Buffett bought Coca-Cola for, his annual dividend today is many times more than the cost of his investment in Coca-Cola.
My God.
Forget about the
Capital
market
appreciation.
value of his Coca-Cola investment, the capital appreciation.
Correct.
His annual dividend from Coca-Cola shares in many times more than his original cost of
Acquisition.
Isn't this investing? Can you invest better than this?
Yeah, true.
Right? Although on Coca-Cola will come, I have a different point of view there. Okay, but we'll come to that. So he distributed Coca-Cola and he later on owned it. Again, manifestation. He was a newspaper boy who distributed Washington Post newspaper. Okay, and later on he became one of the biggest shareholder. In fact, maybe in this episode or next episode, I'll talk about 3 love affairs of Warren Buffett.
Okay.
3 romantic affairs of Warren Buffett, and this also shows a very interesting side to his personality.
Does this somehow relate to that incident that he saw the market demand for Washington Post and adapted to it?
Yeah.
And later in his life, he saw the demand for Apple. He didn't know. You
Yes.
talk about an incident that one person came to him and he went back to get his Apple iPhone.
Yes.
So that's how he, even though he didn't understand technology.
See, where is financials and all this?
Yeah, exactly.
So he studied Coca-Cola balance sheet for at least 2 decades before he bought Coca-Cola, right? He was tracking that stock since he was a child. So see, this is one man who has a very good memory, he doesn't forget, and he relates incidents in his life, and then when he decides, so you see, nowadays they say Warren Buffett takes and Charlie take 5 minutes to decide whether to, so every day they would be getting phone calls from companies, leading companies around the world, requesting them to buy them out. And they take 5 minutes to decide. Now in 5 minutes, can you do a balance sheet and P&L analysis? So this guy is gone beyond data. He's looking, see, in the real world, Chaitanya, there are many things, right, which are visible to us and many things which are not visible. We overrate our ability to analyze data. Okay, there is a data science field out there. There is data analytics. There are many companies who, but I say we overrate things. Tell me, today morning when you woke up, the sun rose. In the evening, the sun will set. Tell me, Chaitanya, does sun rise and sunset?
It doesn't. We just say it that
the
way.
sun is where it is.
Yeah.
Okay. It is because of the rotation of the earth that we assume that sun is rising and sun is setting. Second, the rays that we got today morning, the sun rays, when did it come out from the sun?
8 minutes back.
No. It doesn't take 8 minutes for the rays from the sun to come to us. Those sun rays came many days or probably many months before or probably years before.
Oh.
Okay.
Okay.
So what we are seeing today is actually a past.
Yeah.
Okay. I know I'm becoming a little bit
Technical and
technical,
scientific,
yeah.
which can get debatable.
But but how does Warren Buffett put billions in a company? When he bought Apple, you mentioned Apple, okay? That was he holds, today Apple is almost 40-45% of his portfolio, and this is the biggest investment portfolio managed by any manager in the world. Okay, and yet it doesn't give him sleepless night. And he didn't do a very thorough analysis of P&L and balance sheet, or he would be doing over the years. Okay, so there were some other factors when he was asked why he bought Apple. He didn't mention about return on capital employed or debt equity ratio or the growth rate of the company. He said, and you know, before Apple or before IBM, he never was a tech investor. He said, I do not invest in a business or an industry that I do not understand.
Yeah.
Okay, and yet he invested in Apple. So the first question asked him was, you don't invest in a tech company, and why did you buy Apple? He said, Apple is not a tech company. It has one of the greatest mind share that I don't think any other brand outside of Coca-Cola has in the minds of people. Why did he buy Coca-Cola? Why did he invest in Wrigley's chewing gum? You know what answer did he give? So why did you invest in a company that makes chewing gum? He said, see, 100 years later, technology would have changed so much that the way we talk to each other, way we do business, way we live our lives would have changed completely. But even 100 years later, the method of chewing a gum is not going to change.
Right.
Okay, and this company has a huge lion's market share of every gum that is sold in the world. So people are going to continue to chew gum no matter how advanced they are, and I believe Wrigley's is going to be in that field. Similarly, Coca-Cola.
This is very fascinating.
Yeah.
And it reminds me one saying by Jeff Bezos. Like Warren Buffett and these great people.
Yeah.
They focus more on the things that are not going to change.
Yeah.
In the coming decade or the decades.
Yes.
And the amateur financial people or the businessmen, they try to predict what's going to happen next year, next month, next season.
You gave a very good example. I also read it recently that Jeff Bezos was asked what is going to change. He says many things are going to change. I want to be in a business that doesn't change. Warren Buffett has not divested the stock of Coca-Cola and Wrigley's chewing gum and another company, the candy company known as See's Candy. He says the way people are going to consume cold drink, soft drink or carbonated drink as they call it there, soda, okay, or a chewing gum or chocolates, this is not going to change. I rather be in a business which is not going to change. Right?
Very big difference.
In fact, he has a very good example of See's Candy. So See's Candy is one of the biggest chocolatier in United States and one of the best investments of Warren Buffett ever besides Coca-Cola, right? He made a lot of money from See's Candies. Okay, and See's Candies is a premium chocolate brand in United States, right? Even today when I go to Berkshire, one of the biggest stall out there is not of an airline company or any other fancy company. It is about See's Candy, and the biggest crowd is in the stall of See's Candy. I also happen to be a happy customer. So he gave a very good example. He says, let's say, Chaitanya, that you are going to propose to your girlfriend or your wife. Okay, it is Valentine's Day.
Yeah.
And you tell her, hey, darling, I bought a non-Seas candy, an ordinary brand of chocolate for you because it was on sale.
It's not going to be appreciated.
How do you think the date is going to go? So,
I'm going to be outdated.
Yeah, you'll give immediately, right?
Yeah.
You lost her then and there. So, and now he said, let me flip the example. You take a wonderful box of Seas candies and they pack it very well and give it to your girlfriend. Your girlfriend likes Seas candies, the probability is very high and the date goes well. Now, every time you are going to go and bring a pack of chocolates for her, you will not go with any other brand but Seas candy. So he said, I have acquired that boy or a girl for life now. See, this is how he thinks about brands. It's the mind share here.
Mind space.
Now, there is no financial data here. Tell me, where is data here? So for every brand, for every company that Warren Buffett has acquired, this is how he thinks. Where is balance sheet or P&L analysis here?
Does this
no doubt he has done that also. But
yeah, naturally.
That one factor, what hit him.
Does this also apply to that entry moat he talks about for Gillette, etc.?
Okay. So you mentioned the word moat. Okay. So in this podcast today, I want to discuss 3 terms with you. Okay. If you don't
Are
discuss...
these the 3 girlfriends you're talking
about? No.
3
so
loves?
that is story for some other day.
Okay.
That is a story. Acha, let me talk about one of his first girlfriend who became his first romance of Warren Buffett. And it's a wonderful story. So he liked this girl known as Susie.
Okay.
I think Warren was 21 and she was 18. Something like that. I'm not very sure about. Okay. And Warren Buffett was a very innocent chap, not very handsome, okay, not that good looking in his own words, okay, not that attractive to girls, okay, but he happened to like Susie, and he was a very good brain, right? So he tried to approach her, but then she didn't give her much importance, okay. So this is how he played the game. He went and befriended Susie's father.
Okay.
He would connect very well with elderly people, right, on an intellectual level. So every second day, he would go to Susie's house and have a conversation with Susie's father. And every time he went, Susie would go out with one of the boyfriends, right? And he'll not approach Susie, he'll approach Susie's father. And Warren Buffett played an instrument. Do you know what instrument he plays?
I think guitar.
He plays something equivalent to guitar, known as an ukulele.
Okay.
Ukulele. So you are in music.
It's a smaller stringed instrument. It's a smaller stringed instrument.
Okay. Yeah, a small instrument. So I've seen him play that ukulele. Okay. Right? So he used to play ukulele for Susie's father.
Okay.
And this went on for weeks together, for months together, until he ensured that Susie's father had taken to him completely. And one day, when Susie was going out on a date with his boyfriend, Susie's father called Susie and says, listen, come here. I like this guy, Warren. I checked him out. He's a wonderful guy. Why don't you go on a date once? Because I am telling you with him.
Right.
And the rest is history. Susie became Warren Buffett's wife.
Oh.
For life. Right? Okay. So that also tells, I know we should not be, this is an equity podcast, investing podcast, but that shows how the man thinks about everything.
Right.
And they turned out to be a very good pair of in future. And then I'll tell you about his second, and all happened with Susie's permission. His second and third happened with Susie's permission. So that's also a very interesting angle.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.